The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here, Tiger Technician's Hour. This time I've got my earphone in my ear and I can hear the entry and exit, which I completely forgot. Thousands of shows I've done since I started here in, 2023. Sorry, 2003. What am I talking about? Wow, what a day. 2003. So nearly 20 years. And just completely forgot about the earphone. Gee, it felt quite comfortable, actually. All right, here we go. The Dow is up 123 at 32,527. This is what I said to subscribe to my opening call. We can expect a rally, but we can also expect that there's some kind of a wait-and-see attitude. If the rally holds very strong after 1:30 this afternoon, 1:30 to 2:30, if we're up more than 90 points, that's a good sign, probably going to close positive. But if it goes negative at any point, it says, uh-oh, just a little uncertainty. It's not uncertainty about the results. We never really know the results. It's uncertainty about the type of results we get. No, we don't want to get into that right now because we'll wait. I like to say how the market reacts is the only thing that counts. I don't care what it's anticipating or anything like that. What happens when the news comes out? How does the market act? That's all. So in this particular instance, Dow's up quite nicely. The S&P is up not as much as the Dow. Dow's up 0.34%. S&P is only up 0.19, up 715 at 3777.82. We're looking at just stuck right here between the 9 and the 14 period moving average, trading there. The 9 is still over the 14. That's a good sign. MACD is still positive, although it's turning down, but it's still positive. Stochastic is weak at 48%. On-balance volume is just showing no signs of strength whatsoever. Not good. And the weekly chart in the S&P is okay. QQQ, a little different because it's made almost a full arch to the downside. Excuse me. Much weaker than the S&P is up 22 cents at 264.93. And what we are looking at here is that the MACD is turned down. The stochastic is only at 21%. The on-balance volume is not very strong. And the 9 is under the 14 in the daily chart. The weekly chart has exactly the same situation, except that the 9 is way under the 14. And the monthly chart doesn't look good at all. So a lot has to happen here for the overall. You can't have the general leading without the troops. It can happen for a brief period, but it can't be sustained. Now, next thing we want to look at here is within the context of the indices, the IWM had a look at the difference on the left side is the daily chart. What a difference between the NASDAQ and the IWM, the Russell 2000 small caps ETF, trading down 17 cents at 178.52, but it went to a peak D, a very nice move from 162s up to the 185s, under the 14-period moving average. It needs to get to 185.80 to 186.30, and then the case internal strength is improving. The histogram, that's the vertical line, is called the 0% line. You see over here going into late April, it was green, and then it turned from being positive to negative, red bars, vertical bars. All that's doing is demonstrating in a vertical aspect the distance between the 9-period differential, that's the green line, of the MACD, and the 26-period moving average, the red line. So the faster moving average is moving up. It's just about to attempt this week maybe a crossover in the gold. The stochastic is flat at 18% in the weekly chart. That is really not good. Daily chart is only 52%. Monthly chart is at 9%. My suspicion is that gold is going to have a big move. I'm not sure just yet, but this is the process that you look at to see whether the selling is dried up. I want to look at the weekly chart and say, until gold is trading on a weekly basis, at least one, but I would say I'd prefer to see two closes above 1701. I'm going to make it 1705. That's the 200 period moving. Sorry, that's the black 14 period exponential moving average in the weekly chart. If we finally see a close above, we haven't been above it, let alone a close, since early April, back in the 2000 area. That's 2000, the price, 2000. There it is at 1681, 320 points lower. So it's going to take quite a move for gold, and let's just do the GDX at the same time, because you can see the GDX struggling in the Chapman wave inside track repellent zone. This is where the GDX, the gold miners, should be soaring. They still can, but they haven't yet. Yes, there's an iron reversal, but when you get anything that trades overseas before it trades here, you're always going to get a gap, the same as a TLT. Look at the gaps here in the TLT. Look at all those gaps, iron reversal. So that's not the issue. Let me just say the TLT is down 10 cents, just struggling to hold support. So we look at the GDX. Let's look at, I like to look at ASA. I don't know if I've updated. This is one of the gold stocks, is ASA, gold and precious metals. I just use it kind of as a benchmark. It has five South African gold stocks. I believe it's registered in the Bahamas. 2548 was the high in August 2020. It made a little double top, then a triple top with a U going to the double U formation. Plunges down, does a one-to-one to the downside. And here we are struggling in the 12s for support, and it's bounced to 12.97. And even today, it's down 4 cents at 12.96. It's really working very hard to find the kind of support when it goes from an H pattern right here, right there, to the potential for a W for a U formation. Let me just get this. Is that clicking? No, it didn't click. Click to there, and then click to there. So what we've got is, on the left side, there it is. That H pattern, we call the dreaded H, but this one held the left side low, and that's a big positive. It says it can close above the previous high back in the 1350s. This is ASA trading, ASA Gold and Precious Metals Limited. So I wanted to show you that, but in the meantime, look at the difference between gold chart. He hasn't taken up October in the low 21s, and today it's shooting at 21.01. I'll be back in a moment. Basil, Chapman, Tiger Traditions Hour. Dow's up 181, S&P's 30, up 30. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 40 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. I just wanted to show you this chart mentioned in the den. Folks, if you haven't tested the Tiger's Den, it really, the amount of information there is just tremendous. You don't have to use it all, but it's just information that is pertinent to the markets almost all the time. We're looking at ARQQ trading at $6.33, up 74 cents. Arquit Quantum Inc. Network Device Security. I've been following this for ages, but when it made that peak D in a very small move in the weekly chart from the low that was made back in the week of the 17th of June at 498, and then went peak A, 1 bar rest, peak B. Then it started over again, peak A, peak B, gray, because it was underneath the previous highs. And all of a sudden it goes to C, and then it goes to a leg D at $8.97 the week of the 19th of September. And then it plunges and it takes out the left side low. I kind of took it off our list. I had it as something to follow. I put a list of screamer stocks that are under $10. They can have very quick moves intraday, even 3 to 5 or 6 or 7% sometimes. And we had one that we just got stopped out, and the very next day it gapped up and it went up huge. It went up about 12 or 15% in a single day. So I love those for subscribers, because it's just, while we're waiting for some kind of a low to say, now we can start adding the more of the big caps that we like, besides the fact that we're still long the Dow, still very long the Dow. These are great, because if they work, they give you, we had one the other day, they gave a very nice percentage gain, a low cap stock, a low risk. It was in the insurance type business. So now we're looking at, this is a leg C. It's trading at $6.17. I drew in the Chapman wave methodology, one of the the myriad techniques that we have. Right here, that's the cup formation. But where do you draw the plumb lines to say the number of bars on the left could equal the number of bars to the right? Well, if I took it from the low of the 23rd of October, $3.80, it would take me out to next week. I want to be a little bit more aggressive than that. So I took it to this little candle here from just a little bit before that, around about the 21st of October. And then what I did is I do the left side, right side price time match. That's bar symmetry. I didn't get the plumb line, but I also worked it through the Chapman wave inside wedge target resistance line. This is the green. It's green on the way up, pink on or red on the way down, and it's dashed. And it says this is where you should see the price maybe try to get to as a target and then be repelled. Well, that line says that today the high of this thing would be in the the high today so far 639, and that line comes in at about 642, and then that continues high. 683 would be my target for a potential leg D, and that was the high of the very ugly candle that opened on the 29th of September at 683, which is also the high, and it went 2 points lower, more than that. It went to 573, very ugly candle. So I'm looking at that, and the weekly chart is still saying, needs a lot of work. Monthly chart says, this is horrible. So it's the daily that's going to, remember, you can only start improving when the small time frame leads to the next time frame, and then that time frame leads to the next. So the daily is the one that really needs to start getting to the 1730s for it to say, aha, now the weekly chart, especially since you're more than halfway into that very ugly candle of the week of the September the 20, what did I say it was? The 16th. That would be a big improvement. So yes, it's acting very well, treated more as a shorter term thing. But I've been looking at a lot of these network companies that are involved in either some kind of security or data base action, and some of them have done very well. And I'm talking about the ones in the single digits. All right, enough with that. Let's get back to our story. What we're looking at is the dollar, and I'll look at XLE in a moment. Absolutely. So the dollar is pulling back. It's still within a containment area, and that area is basically between the 113s and the 109s. If it goes to 108, that's something very different. So let's look at the EUR USD to see is there some kind of symmetry here? It's mirror image symmetry. Well, in a way there is, because finally the weekly MACD is improving. The stochastic's only at 45%. But that's good. The 9-period moving average is still pink under the 14. It's going to take a lot. It'll take either 2 weeks for it to cross positive or a really strong push above the high of the week of the 28th of October, which would take it to 1.094. I'd say 1.10 is really what you'd be wanting to look at to get that positive. The other thing is leg D in the daily chart starts one tick above the 1.00936 high of the 27th. But look at this, USD JPY. Remember I spoke about this on Friday in my show, and then when I did the Tom O'Brien show on Friday, I spoke about this, and I said the one thing that's before, when we got this long-legged, not a doji candle, but a long-legged wick action back around about the 22nd of September in the US dollar Japanese yen currency pair, I said you're trapped in this range and it should stay there for a while. Well, it did. And then it broke out, and I considered that was a G/C, most likely alternate count, and that would become a D. And I put that in with a little hat on top, a little caret there that says, be careful, that acts as a secondary downside force when you've used up your down arrow, and the down arrow says that the technicals are still strong enough to keep going, then the very next peak is the one you got to look at. And there again, we had a very long-legged candle, and we went under it, closed right in the body. That's the kind of action I like to look at. But then it made the H pattern, took out the left side low, and is now in a second H pattern. And the weekly chart at peak E with a doji candle after that is saying, this is not very weak action, but it's absolutely not strong action. That says we should probably be making lower lows and lower highs in the dollar-yen currency pair, coinciding with the DXY pulling back, making this dreaded H pattern, the second one. So the lowercase h is going to a potential lowercase m. And in the M pattern, if you decidedly take out the left side low, and in this case, it would be the low of the 26th, was it? No, the 27th of October of 109.54 in the dollar. It says, look out, because you could go straight down to the major low on the left side, which is that low of September the 13th at 107.68. So the upside is limited because we started to make lower highs, not yet lower lows per se, but 112.30, we should be about the strong resistance. So that's just saying now gold has a chance to start moving high. It hasn't pattern-wise. As I say, the miners are lagging pattern-wise. That's all. There may be some individual stocks that are doing very nicely, but overall, that's what we're looking at. So I'm thinking here that this is a very critical week for the currencies. It's a very critical week for the for gold and silver. Although, as I said before, let's go to SLV. This is a different chart. Big, right at the 2 weeks of resistance. Weekly chart is still, it's under the left side high. A lot's going on. I'll be back. Dow's up 142. S&P's up $2.94. Big divergence there. The leader is the Dow. I'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I post the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So last week, actually for quite a few weeks, a number of people have asked, could you do some of your notations live so we can see it? So this is, I couldn't do it live because I was actually doing the show at 10 o'clock, but I'd already drawn in a bunch of things. Let me just show you here. I like to talk about bar symmetry. And if you look at this, look at the bar symmetry that we've got here. Not only that, if you can identify rectangle formations, large rectangle and a narrow rectangle, as well as the cup and arch formation, look at this. From the fulcrum of the low, right here at 6:25 or so this morning, we got a peak E. The Chapman, if you always want to go from an identifiable low bar to a leg A, then a peak A, and then perhaps a leg B. By that time, you should be saying, hey, I think this can get upgraded to a buy mode, meaning there should be at least 4 higher peaks. Alphabetize A, peak B, peak C, higher peak is D. It can go all the way to E, F, and G, but D to E is really your target area. Well, this went to an E at about 6:15, let's say. Doji candle pulls back and then makes a beautiful left side, right side cup formation and goes slightly higher to an F, but maybe that's a B. So you put in F/B because you don't really know. F means be careful. B says, wait a minute, all the technicals are still good. And then all of a sudden the stochastic drops sharply, price pulls back. But look, it's holding the key shorter term moving average, and that's good. Doesn't cross negative. And then it makes an arch formation and fails. And then from a particular candle, you get your left side, right side, which says, all right, now we've gone to the match on the bottom side. We missed it by 3 bars. It went slightly lower, but above the actual target starting point that was about 580 at about 37.94, and it rallies again. It says, hey, we're in a rectangle formation. We can just keep doing this until we break either to the upside or the downside. Well, I did this. I was up and I did this, and I chose a particular bar for the midpoint because it couldn't be the plumb line, but it was the double top, and it went to a couple of bars later and it broke. But what happened? All of a sudden, the 200-period moving average becomes important. Look how many times it hit. It was way above, but since it hit at 736, let's just say, almost every single candle has touched the 200-period exponential moving average. And it went to a peak, A, B, C, D, a very small move to the upside, pulls back. And then at 8 o'clock, there was some news, whatever it is, and has a big spike to the upside, peak A, pulls back, peak B, and then fails. And that's what I call the Eiffel Tower, straight up, straight down. You usually get that at about 8:30 in the morning. I don't know what the news was. At 8 o'clock to do it, pulls back. This is the 1 minute E-mini. Pops up to a leg C, then a peak C, just above the 200-period moving average, and then fails and comes back to trough B, narrow trough C, narrow trough D, and then tries to rally, goes to an A, and then makes an arch formation. Then you get what I drawn in here was, I thought, okay, that's significant because that's the dreaded H pattern, but the MACD was holding so well. Stochastic failed, but it was holding well. So I said, what if I took the midpoint right here at that trough E? I didn't know if it was a trough until it made a higher low, and I did a measured move from there. So I drew it in, I drew the cup formation in, I drew the Chapman wave inside. I'll make it green because I usually do make it green. I must have forgotten. And it says that by 9:15 or so, the high that was made at that peak C minus, because it failed at 8:19 of 37.96.75, should be a high. Well, it just missed it, but in time it was 1 bar late, one minute bar late, and then it went to a peak EF doji candle. The stochastic started pulling back, the on-balance volume started pulling back, and it went kaplop. It went under the 200-period moving average. Then there was there was the open, and the open said, oh, there's still residual buying, you've got to buy the dips, and it spiked up to the 37.90s. In a peak G, and that's your Eiffel Tower, meaning straight either at 8:30 or when the market opens, there's this pop to the upside, but it's a false rally. And it comes straight back down. Looks like an uppercase A. Straight up, straight down. Takes out the left side low, takes out my measured move on the doji candle by 2 bars, and it plummets under 37.85, and it goes down to 37.94, pops to a peak A and a B minus, turns around, dreaded H pattern, takes out the left side low, and then you started another move of which I did have time to do it. I drew in this left side, right side price time match, and it said that by 10:16, it should try to tackle the high of at 9:32 this morning of 37.99.50. Well, I went to that, but here's a technique that I've developed for years. I've spoken about this, but I haven't made it a technique because it doesn't happen that often. But when it happens at a peak C, I've done that forever, especially in the currencies. I talk about a peak C1, C2, where it fails to get to that D by just a fraction and then comes down. And if you're ready for it and you can identify it as a peak C1 and a peak C2, meaning it acted like a D, but the price just didn't get to that extra penny or 25 cents above the left side high. So I've tried to use it now for some time where I get parallel highs, especially when you're dealing with the futures, which don't move in pennies, it moves in quarter cent moves or quarter point moves. Look at the high that was made at 10:06 this morning at 37.90.50. Well, look what happened at 10:11. It goes to 37.90.50. The exact, by 25 cents, it never made a D. Even the on-balance volume was good. Was rising. The MACD had just a tiny little dip, was still very positive. So over the years, I've learned to try to think of it as a peak C, a false peak B. So it's really like an artificial C. So what I did is I typed in C/D, meaning technically it is absolutely a C on the Chapman wave methodology. But be aware that peak B2 could have been a false peak, and therefore you could be a D. And look what happened. It pulls back. I drew this in just a little while ago. Left side, right side price time match. It comes right back, tests the 37, 79, 75 level. And now we've made a peak B, and we've gone down to a fractional, a quarter point lower. So this is a brand new. This has to be the brand new gray A right here. So let's do that. I don't know if I don't want to take time now because there are a bunch of questions that I want to answer. But let me just see. If I had to just type in the gold contract, just the continuous gold contract, what do I get? So here's your low at 8:20 this morning on the 1 minute chart. It goes peak A, peak B, peak C, and there's your peak D. So you can put your down arrow, uppercase on the way up. So here's your up arrow and your down arrow. All right, it pulls back, holds the what? The 200-period moving average. Look at that incredible technique that it's so easy to put in your toolbox. Just, you remember your Sears and Roebuck massive toolbox with all your tools? I don't have Sears anymore. But now what you do is you start to type in, is this a continuation or is this a brand new buy? Well, right here is your starting point at about 8:55 or so, and it goes peak A. This is gold continuous contract. A, peak B, and it goes to a C and then fails. But wait a minute, it comes back. So this is really a C1. Here comes your C2. It hasn't taken out your starting point, so this is still an active buy mode. Look, the starting point is yeah, gold at 16.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Almost back. So we're looking at the XLE trading up $1.28 at 92.71. Remember, 93.31 was the high in June of June the 8th, 2022, this year. So we've had one cup formation. It went to a peak D. I never like to see a peak D underneath the previous high because it says, oops, you got to be a little careful here. I didn't have enough strength to break out above that. So it pulls back to where? The 200-period moving average. It gaps down and then gaps up. It has an island reversal. Goes peak A, peak B, C, D. Potential Chapman wave instant restart, but always keep the count going. E, F should be F/B, but F is good enough. And right here is where I start to expect some kind of either a massive break to the upside or this is where it stalls. So the XLE has been S&P Select Spider Energy Fund has been spectacular. It's only a leg C in the weekly chart. That is at the high of 80. Whoops, why did I say that? It was a high of 93.02 of last week. So far, we've gone to 93.01. We're 2 pennies away from breaking out. And that would be extending leg F in the daily, extending leg C in the weekly, and that should go to a D at some point. And leg E at 93.31, at 93.32 starts a leg F, and it could even be an alternate count, F/B, in the monthly because the 9 is way above the 14. The MACD is good. Stochastic's the one that says to me, be a little careful here because 73% in this stochastic, not above 80 after all this, says there's just a little bit of some internal weakness and the on-balance volume is a little overbought in the monthly chart, starting to get overbought a little bit in the weekly chart and overbought in the daily. So I'm saying just be prepared. There's some kind of a pullback. Have your buy list ready for the this particular sector, stocks within the sector. And I'd say you can even have a little patience if it does. If the XLE anytime this week closes under 86.50, it says, uh-oh, now we're in for at least some kind of a digestive phase. Now you can take your picks for another big move to the upside at some point. But that's all I'm saying. I wouldn't. Shorting is just. I don't think you want to try shorting this sector. After all, the stronger sectors tend to remain the stronger sectors for a while. Natural gas, I spoke about it all week last week. And then on Friday, I said, I'm liking what I see. I think it's doing very well. And it's up 11% today, 72 cents. This is a continuous contract. Natural gas trading at 7.122. This is a leg C. The target of 7.32 would be for the that would be for the 200-period moving average as well as the left side. But what I really did is I did some work on the UNG, which is the United States Natural Gas Fund. And if I'm a little conservative and I take it to the high that was made in natural gas on the 6th of October down to the low that was made on the 21st of October at 17.41, then what I'm looking at, peak A pulls back, higher high. Now it starts with a higher low, goes to B, higher high with a higher low, and that's why I said the breakout on Friday was really positive. Well, it's gapped up today, right at the 200-period moving average. Now I can say, okay, my left side, right side price time match looks a little silly now because today's the day that it should be trying for the the high of the 6th of October of 24.32. So I said, all right. So now why don't I get a little bit more conservative and I'll move this left side for the plumb line, not from to the low, but I'll move it, give it a little time, give it another couple of days. So there it is. Just stretch it out, going to the high of peak A right there. So now I can go back and say that says that by Wednesday or Thursday, if this power moved to the upside continues, then we would be looking at, look, there it is, it's stalling right at the 200-period moving average and the Chapman wave inside wedge target resistance line. And it says maybe by, the 10th, I'd even go further out. I'd say by the 10th or the 18th, maybe natural gas is trading in the 24s. It's at 23 right now. 23.10 is the high of the day. But after a gap up, will there be a second gap tomorrow? I don't know. We'll see what happens. But this is really improving. The weekly chart says, what are you talking about? This is just the cup formation going to an arch formation, back to a cup formation in a trading range, rectangle. But look at the rectangle. It's between the 17s and, to be conservative, let's say the 28s. So this could be a big move. We have got a peak D in the monthly chart, but natural gas, I'd said for some time, this is the period where natural gas normally is running because winter's coming. And it hadn't done that. But this is a really big gap up move to the upside. And you're seeing it in the United States Natural Gas Fund. And that makes the key support in the 2190 to 2120 area on a very short-term basis. FXI, I was asked about that. Is something happening in China? Well, we're getting almost the same chart pattern in the FXI, the iShares China Large Cap ETF. Very big move over the last 3 days. Since Thursday in the 22s, we're now in the same prices as that UNG. Anyway, FXI is trading at 24. Oh, it's the same price as well, up 16 cents. I wouldn't put them in the same category. Natural gas has a much greater chance to be very strong because winter's coming. FXI still has a lot of issues to deal with, especially if you're looking at the weekly and the monthly charts. But the pattern right now, there's similarity in price and just the last, I'd say, 12, 13 trading days. So FXI is trading 23.99. I think it can try to tackle the 25s, but not if it breaks under 22.83 first. That means it's going to take much longer. But that'll be nice to see. If China can start to come back, that's really going to help our markets. Okay. Now, questions here. I went over to my engineer because I made a couple of mistakes there today. Questions came in. Yes, I'll deal with it right now. So ETHE. So I think I spent a little time on this on Thursday or Friday. I looked at a GBTC, that's Bitcoin fund. So this is peak A, peak B, C, D, E. So it has spectacular move, Ether, Grayscale, Ethereum, ETF, and it made a low back round about the September of 2019 at the 239 level. And then it goes peak A in November, pulls back, holds the left side low. So this is a continuous buy signal. Makes a huge move up to 1828 in February 2020, and it keeps going. And the next peak C is at 2884 in June of 2020. Pulls back sharply, very sharply, down to the fours, and then rallies again. It goes to a peak A, B, C, D. I haven't typed in it. A D in May of 2021, and then a massive move in November 2021 to 4740. So all that time, we were in the 12s. We had a short-term and long-term position in the GBTC, and of course it screamed from the 12s up to the 50s. We took profits all the way up, held it for quite a while, and then we just said, okay, that's it, we're out of here. And we've not been able to get in. We've tried a couple of times, but it just has not been ready. I was saying the other day, I think that this is the first time that I'm seeing the inflection points in Ethereum and Bitcoin to say they're getting ready for something. Short term, they're bouncing. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So what we're looking at here is a P-mini again. It's done this look at peak A, peak B, peak C, and there's your leg D. And if I wanted to, I could draw in a cup formation. I just didn't have a chance because in the break I was busy trying to correct some things. Okay. And there's your cup formation. Just it fluctuates, and there it's zigging around the 200 period exponential moving average. So you want to use these tools. You'll find that they can be really helpful. ROC is Gibraltar Industries, products and services for renewable energy, ag tech infrastructure, made a peak D back in 2021 January, and then plummeted down from the hundreds into the 30s, and it's having a nice move, and now it's made a peak, G/C, and that 200 period moving average is like a magnet. It's gone to it, gone above it, couldn't hold above it, now it keeps testing the 47s, but it's a nice looking chart, but it's just needing a little digestive phase right now at 4868.24. The symbol is ROCK. All right, a couple of things we want to look at here. So this is a very important moment for the sectors, because I'm not interested right now, I'm interested in what happens Wednesday to Thursday's close, preferably on a weekly basis to Friday close. Whatever happens this week, I think by Thursday there's going to be a stabilization in some areas and a breakdown in others. And we'll see how that's going to tell us more about what the market thinks of the election. It's not what you or I could think. The market couldn't care about that. The market does care about the initiation of changes, and that could come about Wednesday or Thursday, and you'll see that reflected in the market. So the VIX index again is below the 200 period moving average. I'll just make it clear. If on Wednesday at any time the VIX starts to trade in the 25 to 26 area as the market pulls back, that's going to be a big negative. I don't know how you're with the Dow leading and the others not doing as well. If everything's working well and the VIX is down to 23s, that's going to be a big thing, and it's a big change. Stay tuned for Steve Rhodes, a great program, and check out my opening call, my daily news.